Hello and welcome to another episode of our From the Helm series, live here at Gather Round, Adelaide's Conference for Resources Rising Stars in partnership with Bell Financial Group. I'm Grady Wulff, Market Analyst with Bell Direct, and with a familiar face here, someone who doesn't need an introduction, Simon Lawson of Spartan Resources. Thanks for joining us again.
Thanks for having me.
Now, a lot's happened since we caught up earlier this year.
We say that a lot and we catch up regularly.
We do. It happens every time.
A lot going on.
Talk to me about the Ramelius deal.
Look, it's a pretty obvious kind of setup. A lot of synergies, real synergies, and that's something that Mark and I have spoken about at length. Being 65 kilometres away from their flagship operation, us being very high grade, them being, let's say, mine constrained or mine life constrained, the combination of the two gives obvious benefits to both parties.
Now, when's the deal set to be done and what does the deal look like for investors?
Yeah, so it's a merger by scheme of arrangement at the moment, but there is also an underlying recommended takeover bid sitting behind it. So if the scheme, for whatever reason, failed to come through or get through, then there's a recommended takeover bid that falls into place behind that, and Ramelius already occupies 19.9% of the register, so they're in a pretty good position. And obviously we've recommended it as a board, so we feel very strongly that this is a really good combination for shareholders. So that the scheme will complete if everything goes to plan at the end of July. And what that means for shareholders is they'll end up with about 40% of a company that at the moment, Ramelius, last quarter produced over 200 million free cash flow in the quarter, which is rare. Twice, very rare. And it's almost twice what some of the big gold producers are doing. So it's it's an incredible opportunity for us to be combined with that company, with the incredible ore body and the discoveries we've made at Dalgaranga.
Now, talking about Dalgaranga, drilling hasn't stopped there. We know that. No. It hasn't been put on hold because of this deal.
Correct.
Tell us about what the latest drill results are looking like.
Look, we put out some really good drill hits the other day. We've gone back to Pepper to basically work out how much more grade we can put into that resource model. And given that it's already 10.3 grams a tonne and over 75% indicated, it's a very strongly supported ore body at the moment, but we actually think there's a lot more grade there. So Pepper may have a lot more to give. And the other area that we're drilling with a fair bit of vigour at the moment is from underground, the West Winds area, which historically we produced very high grade production from there when the mill was still running. So we know that there's really good gold there, and we delivered a couple of good hits there that show that, what we've been talking about for a while, this is a big system. And we've still got a 65,000 metre program to complete from underground. That follows the mining. We're over 1,800 metres down on our development drive at the moment, which is the Juniper decline. And we'll end up 100 metres away from Never Never by May.
Wow. So everything's happening really quickly, but
very quickly.
Very high quality.
Of course.
At the same time.
Well, look, we've got great people.
And safety is pinnacle for Spartan.
Paramount, 100%.
Absolutely. Now, it's come a long way since I came to the site. What's the Juniper decline look like? I know.
Look, and I must admit, because I've been doing a lot of travelling promoting the company and then obviously being very busy with this deal, every time I go to site, there's just been a huge amount of activity.
Something new,
in the background. And I've got incredible people that I've brought into the business over the journey, some people I've worked with before and some people that were there before. And that combined team, we're very much behind the Spartan brand. And we believe very strongly that this was going to be a standalone mine. And then, we had an opportunity put in front of us. And to me, we've taken that opportunity with both hands. To end up with 40% of a very high margin gold producer and 275 mil in cash for our shareholders, I think is a great outcome.
And maintain the project you've worked so hard.
Correct. And not be, I suppose, not put any of that on hold.
Exactly. Now, talking about the mill that you have on site, care and maintenance mode still, but is there a timeline to when you're going to turn it back on?
So look, on a standalone basis, it was 18 to 24 months from financial investment decision. We were looking at making that later this year, but based on the fact that we're going to merge with Ramelius and end up with access to the Checkers plant, which is only 65 kilometres away, what we're able to do is defer the CapEx. We don't have to start our own plant, and we can actually send that high-grade material from Never Never, which will hit in the second half of this year, and send it straight to Checkers and start realising cash flow from that opportunity almost 18 months ahead of schedule.
And without the CapEx of turning a mill back on.
That's right. So there's
exactly what investors want to hear.
A lot of synergies. And they're real ones, right?
And do you have an idea of all-in sustaining costs yet or not really?
Look, Ramelius at the moment is producing at under 1,800 Australian.
Which is unheard of.
Which is unheard of. And the idea, and Mark and I, as I said, we've spoken about it extensively, is that this provides almost a decade of us being able to do that as a combined entity, which is incredible.
And looking at the kind of scope right now, hedge books are still closed for most companies.
Yes.
What's your outlook for the gold price?
Oh, look, I think it just keeps going.
Yeah.
I think instability has always driven the gold price. I think there's a lot of people, you know, they put a lot of detail and they go right down into the weeds on it. It's very simple. Instability is there.
Uncertainty, volatility.
There's been new volatility created by, you know, the
One
US
man
government.
himself.
Correct. One tweet away from craziness, which seems to happen on a daily basis.
Look at the market today.
Correct. And look, to me, everyone needs to get as much exposure to gold as possible, because to me, even with the talk about de-dollarization and all these other conspiracy theories, or whatever you want to call them, to me, there's just safety in gold. It's always been that way.
Absolutely. Simon, thanks for your time today. Thanks for catching up as always.
No problem.
Can't wait to come see the site anytime soon, and thanks for joining us from the helm.